Welcome to the channel. I am James, and today we're looking at Walt Disney Co. ticker symbol DIS. They have just released their latest earnings for the second quarter of 2022, and we're going to be going through these numbers right now. These are hot off the press. Then we're going to be looking at my discounted free cash flow model and Buffett Graham intrinsic value model to see if Disney is a buy based on these numbers. But first, can you please give a like on the video? Really helps me out, and subscribe if you're not already, because we're going to be bringing as many stock earnings as we can. So what's happened with Disney? It's currently at $105 a share. Well, that's a lie, actually. It's currently at $109 a share. The after hours has been kind. It looks like the market is reacting pretty positively to these earnings. 3.6%. You can see it's the highest it's been in, well, I suppose not that long. Disney has took a hammering down $50 on the year, 32%. If we just go back a year ago, it's down 40% and down from its all-time highs at $97 a share, $197 a share, down to down 46%. If we take it back, it's the furthest it's been. Obviously, the pandemic bottom when it was at a great buying opportunity at about $95 a share. This stock has gone back pretty much about 6 or 7 years to 2016 was when it was really about this price. So is this a buying opportunity? That's the question I'm going to answer right now. So let's just have a look at the summary at the top here. Revenues for the quarter and 6 months grew 29 and 23% respectively, despite a $1 billion reduction in the amount due to customer early terminate license agreements for film and television content. Diluted earnings per share decreased 26 cents to 26 cents from 50 cents. Earnings per share has increased to 89 cents from 52. Let's just have a look at this line here. Our strong results in the second quarter, including fantastic performance in our domestic parts and continued growth with our streaming services. 7.9 million Disney subscribers added in the quarter, and DTC offerings exceeding 205 million. We're on a league of their own, says the CEO. Well, shocking statements from him. Of course, he's going to say that. Anyway, we have the summary here, but we're going to go straight to the stuff at the bottom, which is the actual cash flow statements and statements of income. And firstly, we are going to be looking at revenue of Disney. So we are not going to be looking at the 6 months ended because we're just talking about the quarter. I can go through the trailing 12 months and equivalent years. But what has happened on revenue? Well, it's gone from 15.6 billion to 19.2, so that is obviously a massive increase. And if we just go to Yahoo Finance here and go to the income statement, you can see that revenue for the years has been increasing even with the down years of 2020 and 2021. 59, 69, 65, 70, 67, and now with these latest numbers, what does that mean if we include this in the quarters? Well, you can see quarterly we are increasing 17, 18, 21. Previous quarter was 15 billion, and we are now up to 19. So for the revenue, that gives us 76.6 billion. So that is higher than the trailing 12 months and a record year for Disney. So that is excellent to see. Next, we want to be looking at the profit. How do we get profit? Well, it's revenues minus all the costs, and that gives us the profit here. Disney is a profitable company, but down 901 million in 2021, 470 in 2022. If we look here, where's the thing? Well, you can see costs and expenses are up pretty dramatically, up almost 3 billion, 7 billion on the 6 months. I know I said I wouldn't talk about that, but that is quite a big jump. And yes, you can see basically things are relatively flat, all the same, with the major costs being on cost and expenses, and actually here income taxes on continuing operations. So what does that mean for the year? Well, we've got the net income here, 901 million. Sorry, that's on the quarterly. That's very low numbers for even Disney. 12, 11, minus 2, 1.9. Is this a good year? Yes, it's better than it was. It's 2.6 billion, obviously a far cry away from where it was in 2019, but Disney is increasing their profit, which is a good thing once again. Next, we're looking at the shares outstanding. Are Disney buying back their shares? Are they issuing new more shares? I would normally explain why, but Disney's shares are flat. 1.828 billion, you can see 1.829. So the shares are relatively flat. In fact, they've bought back a little bit, but not really a massive effect on investors. But that is good that they're not buying back, not issuing new shares. Finally, we want to look at the free cash flow. Well, let's just scroll down a little bit here. How do you get free cash flow? Cash operation activities minus capex. We have cash from operating activities here. It is up 1.5 billion compared to 1.4, but Disney is very nice. They've told us at the top what they've actually done. Free cash flow, here it is here, gone from 623 million to 686 million. So what does that mean for the cash flow of the trailing 12 months? Well, Disney did have free cash flow of 9.8 million in 2018, 1.3, 3.5, 1.9, and actually the free cash flow is down 1.5 billion for the trailing 12 months. So that is obviously a negative there. We want increasing free cash flow for Disney, and they have not got this. So let's have a look at the Buffett-Graham intrinsic value and free cash flow models. We're going to talk about free cash flow first because you're going to see very quickly that this does not like the stock. We've calculated the future free cash flows. These are based on averages. Let's just get straight into it. $38 a share, 63% discount. That is a massive discount based on these slow growth. Now, this is because Disney has been absolutely hammered in the pandemic. I think the only way we can really sort of see if Disney is to get back to where it previously was, let's go to here again. 9.8 billion in 2018. Let's keep that number in mind. I mean, if Disney was to have about that, let's just go to 280%. That gives us 10 billion. Let's go a little bit lower. 270, 9.8 billion. That would have the stock at a buy if they were increasing in that free cash flow. A massive buy, in fact, $182 a share, 73% discount. Disney needs to get back to those levels of free cash flow once again. If we go back to 2020, say that these years are a bit of a blip, what would that give us? Let's knock this down again. Yeah, let's just say they had increasing free cash flows in 2020 and 2021. This would say that the stock is slightly overvalued right now as well. So Disney really need to be generating free cash flow very soon of over 6 and 7 billion a year with a massive increase. But I know that seems a bit doom and gloom on there. But we have the Buffett-Graham intrinsic value, another model estimation that I use, which takes earnings per share and expected growth rate. Analysts still think this stock is going to grow massively, 39% over the next 5 years. And with an earnings per share of $1.45, what does that mean for the share price? $126 a share, meaning it's at a 20% discount. So that model actually says it is a buy. So that is probably close to what people were thinking. It's a hard one, Disney. Basically, that's why these models don't really like it. Let's go back to the original model here, which I think I had about 70%. We'll go 75. You know, between $50 a share, $126 a share. That is a very wide spread. If we look at what analysts are saying, obviously I don't have it up on the screen. Tip Ranks says it is a strong buy, $180 a share. Lowest side in 12 months, 140. High side, 229. Analysts are saying buy this stock basically no matter what. Our models are actually a little colder on Disney, which is surprising. Right, guys, thanks for watching. Please give a like on the video if you enjoyed it. Subscribe if you're not already, and I'll catch you guys next time.